Hey guys, Logan Hicks here, also known as Baron Von Short's YouTube channel. We're going to be taking a look here at a couple of stocks today and the next week or so, and as promised, one of the first videos that I said that I would make for the community would be on Naked. And so to dive straight into the situation, a lot of people have been asking me, why am I long on Naked? It doesn't make any sense. It's not performing well. The numbers don't make any sense. We're really frustrated. We don't understand why you're so long on this stock. But people trust me. Right now, about 8,000 collective people follow me. And a lot of people have bought this stock. And I get a lot of messages on a regular basis. I actually turn off my notifications because I was on travel for business in DC. But I've got 36 notifications just this morning. To give you a brief understanding of Naked, we're going to break down the company as promised, and I'm going to show you why I'm long on Naked. So to start with it, we have to understand the business. And to understand the business, we're going to jump straight into the metrics. So when you look to analyze a business, you need to look at what the EBITDA multiplier is, or the sales multiplier is, for the valuation of the company. You have to understand what it's worth before you can say what it should sell for, or before you can even determine if it's at a discount. And so to understand what that is for this company, you have to understand the fashion industry, which Naked is. It's an intimates apparel fashion organization that holds a wide array of various different undergarments and women's intimates and even men's apparel for some instances. And it really helps to understand the business model because it's a very sales-driven organization. It makes all its money on sales. If it doesn't make sales, it doesn't make money, period. And so this is where we start to look at the valuation. So on a standard median of 40 to 60% of the organizations, this goes to show that this is the valuation. Now, to understand where the company lies in regards to that, you have to understand its ranking. And according to Zacks, it's in the top 14%. So it's one of the best companies in the industry. It's in the top 20% for sure. But then to take it to the next level, you have to understand the valuation. So we're going to go ahead and look at the numbers. So right now, we've got the sales basis of 1.1 to 1.5x, with a floating of about 1.3. But since we're more towards the far end in terms of top 20%, we're going to go with the 1.5x multiplier. Now, to understand that, we have to understand for their sales what their gross and net sales are. So to understand that, we go straight into their announcements from 2018 and 2019, and we take a look at what they did. So in 2019, they decreased in sales from 111 million New Zealand dollars to, we're going to go with US, 77.4 from 90. However, they also had an increase of 33.5% within the same time frame in gross profit margin. So they sold less, but they performed better in sales. So their margins were better. So they had a 14% decrease in number of sales, but a 33% increase in gross profit. So they sold less stuff, but they sold it for more money. So they pretty much, what they're saying here is they increased their prices and they made more money overall. Now, what that translates to, though, in the net sales is their metrics in the future are going to build based on their previous historic metrics of having over 2,500% sales increase over a period of time, which is one of the first indicators of why I find it to be a very good business. Metrics like that is a very, very strong indicator of strong performance in the near future. Now, to take a look at the next things we have to consider from that, we're going to go ahead and grab this number really quick, and we'll do the math here. We'll say 77.4. We're going to multiply it by 1.5x. That's $116 million. Hang on to that number. Now, the next thing we need to take a look at is what happened to the recent price move. There's a lot of rapid price movements. It dropped really hard. A lot of people are really upset. They want to know why. This is the answer as to why. They took 25 million shares and they sold it to a vendor in exchange for wiping out $2.5 million at 10 cents a share. At that point in time, I think the share price was around 12 cents or so, and so they picked a hard number. Now, they also took approximately 1.575 million, and they also added that for 15 more shares, so they have 1.575 and 2.5 million here. So that's about $4 million. So keep that in mind as well. And that adds about another 40 million shares. Now, recent announcements from Armistice Capital show that about 6.72 million is about, I think they said 8-point-something percent, 8.2, 8.5. So there's roughly 70 to 90 million shares in collective existence. Now, the other thing to keep in mind is when they conducted this was a month after the fact that Binden Investments conducted the merger. And so you have to keep that in mind. They acquired a controlling interest in this company, so they want to hold on to those shares. It's very important for that company to maintain those shares. Now, with that being said, they also shifted around warrants that were previously existing from 2018 timeframe, and they reduced that cost for exercise down for those shares to 10 cents. So what they're doing here is they're saying, we have all these bars all over the place, and Anderson came in and said, this is a bad idea. Let's lower the bar to flatten the field and set a bottom price. And once you have a defined bottom price, the only thing you have to look forward to is the price increasing. Because if you're at the bottom resistance, there is no resistance below you unless you force your way down, which market shorters have demonstrated the capacity to reach that. And people reached out to me and asked if I could help get the price lower, and I naked shorted it down a little bit to help them get in and buy in, which many people did. Collectively, I've helped sell about 40 million shares of naked in and out within the past month or so. And so that's about how long I've been holding this, and I feel very confident today, especially with preliminary announcements this morning of the shares already having a 129% increase to 16.5 cents USD. Now, with that all being said, let's move forward. This is the contact information for the organization, their legal counsel, their auditor, their transfer agents. I would say don't waste your time reaching out to them because they don't respond to anybody, it seems, hardly, which is very frustrating, and that is a bad idea. There's a conference call here that you can listen into, Physical 2019. I highly recommend it if you're going to be an investor in this organization. It was a very good call to listen to and give you a lot of useful insights into the company, such as their looks for the divestiture, which would be very important to the company in the very near future, especially when you also consider the fact that they made several announcements in regards to sales, which is very, very important, which is part of the reason why Adams was brought into the company from a billion-dollar company, and Anderson was pushed into a sales slot. Because the current CEO, Ms. Johnson, Ms. Anna Johnson, if I do remember correctly, as well as Adams, they both have a history of being in very large corporations. Ms. Johnson actually used to be a director in Naked before she left and then was brought back as the executive. Anderson also comes from very large organizations. But Anderson and Johnson specialize in sales. They're very, very good with sales, both online and brick and mortar. Now that's very, very important when you start to look at the current time frame that they're operating in, which was Prime and eBay Day were literally just weeks ago. And that's something that is not reflected in their current metrics, which they openly said their plan in this call was that they intended to liquidate the assets and buy new inventory because inventory was their biggest constraint currently. That's why they're paying off their debts. That's why they're exchanging these stocks for these vendors at these prices, which to consider that by itself is an incredible deal. When you go and you take stock instead of cash as a vendor, that's because you know the stock is worth substantially more than the cash that they would offer you. When you take that into consideration and you look at the statistics behind that, the average person won't exchange a guaranteed value versus a risk return value until it exceeds at least 2.5%, 2.5 times. And so that means that the vendors, by a minimum standard, see this stock worth at least 25 cents. These vendors also being the same people who have already seen the metrics and the performance from eBay Day and Prime Day, as well as the new performance from the sales from the company being the people that produce their goods in the first place. When you also consider the fact that they've got new vendors, they've got new producers, and they've brought on a lot of new products, they've started pushing down certain lines, bringing in certain new lines, and started selling online on a much more driven basis, and they're looking to drive their sales by at least 30% more. Pretty much everything they've discussed in this call from the 20th forward, they've hit. Now, when you start to consider that on the long term, you start looking at their filings, you start to see all kinds of new things that get really, really exciting, like Armistice Capital buying in. This is a brand new vendor coming in, buying in stocks, and they bought a substantial sum depending on how you translate it, either anywhere from 8 to 25% of the company. That's a very exciting amount of movement. And so when you start looking at other things, you start looking at historical. So when you start looking at Simply Wall Street, you look at their zero debt balance sheet history from 2017. So they like to operate with minimal debt history, and they like to keep it that way. And if you see here, here's more debt restructuring. They don't like to have debt. They don't like to have that liability, and they continue to eliminate it. And yes, there is an outstanding notice for minimum bid price performance for compliance, which is due today. But the thing you'll notice immediately is they didn't announce a reverse split. They didn't announce anything in regards to a reverse split, and they haven't had any discussions about a reverse split, which means the company is either very confident that they're not going to delist, which they have made no announcement towards, or they're very, very confident that their stock price is going to drastically improve based on the recent announcements they're going to make soon, which from other statements that they've made previously to other people that have made inquiries is that they're looking to make an announcement on their new updated metrics and sales performance in the very, very near future. Now, when you start looking at their metrics, there's a lot of things here that are very, very enticing. The first one I want you to take a very strong focus on in terms of value is their metrics on their sales. Their 5-quarter trend for 2019 shows a 96% net income growth and an 81% sales growth. What that means is they've almost doubled their value from sales, because remember, their sales is driven heavily by their their value is driven very heavily by their sales. Now, if you look here, you'll see an EBITDA of $7 million negative. But this is in consideration for their $12 million in restructuring and additional cost savings of another about $11 to $12 million more and other changes that they've made, be it vendor or margin improvements. These metrics here, the EBITDA already shows that they're going to be cash flow positive very soon, and on a per share basis, they are doing very, very well, respectively, especially with their strong gross margins. Now, they do have some operating issues they have to sort out, but that's why they brought in Adams, who has a history of being in a multi-billion-dollar environment. Now, when we start looking at other things that are very, very enticing, like capital expenditures and other metrics, we'll actually take a look at that inside of Webull. Where'd my Webull app go? Let me pull that up real quick. So when we start looking at their performance metrics historically, notice here on the trend lines, we've got on the operating expenses, they've got an incline improvement here from 18 to 19. They've got about a same set in terms of investment. So they're maintaining typically their average investment quota. But notice here a very important trend line. Their financing has decreased sharply. So they've actually decreased the amount of financing utilization that they've used. Another thing to take into consideration is their balance sheets. If you'll notice, their balance sheets have substantially increased. Their assets going from Q1 2019 to 4.9 up to 103 million. This metrics is in the million USD. So they have over $100 million in assets, and they do have a lot of liabilities, correct. And they have been chipping at those very, very rapidly since Q1. And they will continue to decrease, as we've seen as they raise capital and eliminate their costs. If you'll also notice, their net incomes are almost broken at even at zero, which is a 0.1 net negative margin. That's $100,000 under. That's negative $100,000. That's not a lot of money in comparison to a company when you're talking about an organization that's worth hundreds of millions of dollars. Because remember, that $116 million is what they're worth before you consider the $108 million almost that they currently have in assets, plus the $4+ million in cash they just raised. That puts them at about $108 million in total assets. So when you take that into consideration, 116 plus 108, you've got a total value of 224. Other assets and systems in consideration, companies are typically projecting them to be somewhere in the valuation of $200 to $300 million. Now, when you take that into consideration, then you start to look at the actual company itself, holdings increases, the short interests, days to cover, etc. You start to see that these metrics are improving, and that's just because people are feeding off of fear. So their fear, uncertainty, and doubt is what's running around in the market in regards to naked. But in terms of true valuation and a long-term value, which we're going to start to see very, very, very shortly once those new metrics come out, the real valuation of the company is going to be reflected, and it's going to increase to its regular valuation. And when you start looking at that, and you start to see what the company is being valued at, you start to realize the company is drastically undervalued, 6.97 on the market cap versus 200 million, which drastically impacts the share value. The average analyst and people like myself typically see this stock running around anywhere from several dollars a share. It's an incredibly valued company. The discount here is incredibly cheap, which is why companies and organizations like Morningstar have it at such a strong buy. And that's because of the fact that it's drastically undervalued. Now, there have been reports this morning that the stock has gone up to 16.5 cents. I haven't confirmed that, but they've shown screenshots directly from NASDAQ real time. I haven't seen that, but I also don't have real-time NASDAQ, and that's because I don't really trade during pre-market. And that's because the fluctuation in prices are so drastic and dynamic that it's not a stable basis. But showing a 129% increase is an incredibly strong indicator that the price is going to move up, regardless of what other shorters might believe or say. And contrary to popular belief, 1 million shares for a stock like this is next to nothing. 10 million shares, 70 million shares, it doesn't matter how many have been borrowed because they have to be bought back. And eventually, once the price is moving up, especially if it's gone up to 16, those will start to cover down because they'll have to. But that's just the simple gist of it, guys. Let me know your thoughts. Let me know your comments. If you like the video, please like and subscribe. I'm going to be making a lot of videos like this. A lot of people have asked me to share my insights and my due diligences on businesses like these. I have a history of being a business broker. I work with a lot of business brokers. I buy, sell, and trade businesses myself. I actively own and operate 63 organizations. One of my companies recently just made the news with a cyber system we were looking at. I own a wide variety of businesses and a wide array of, I guess you would say, industries or institutional pathways, depending on how you like to describe it. But I'm a businessman by nature. I'm an entrepreneur. I've been very successful and very blessed in my career, and I'm more than happy to share my knowledge with anyone who would like to learn. If you have any questions, please feel free to comment below. I'll be standing up a Discord channel relatively soon, and I look forward to everyone's feedback.